Hey guys, Steve here from theturtlefollower.com with the weekend update for Saturday, October 18th. So we're going to take a quick look at the markets real quick. Obviously, you know that we've had some rough days, especially towards the beginning of the week, that we were down pretty significantly. Towards the end of the week, we tried to regain a lot of what we lost, but sure enough, we came up a little short. As far as the S&P goes, we pretty much called out this area here between 1848 and 1868 as the area that we really need to see some buyers step in. Tuesday and Wednesday, Wednesday and Thursday, we saw significant pushes down into well below that range, down to almost 1812. But then what happened was they were bought. All right. So essentially what happened here is bears ran out of steam. Nobody was left really to sell. And the bulls stepped in and said, all right, well, we're taking these at a discount. We're going to start buying some shares, buying the market. And that's how we got these long tails on Wednesday, Thursday. So now what we have here is we still have this downtrend line is in play. And you can see what's happening with the 50-day moving average. I believe that we also, when we had these tails, I believe that was also close to the 200-day moving average, which I don't show on here. Very similar to the 50-day moving average. It's the average of the last 50 days. The 200 is the average of the last 200 days. So I think this did come through here at some point. But the way it looks right now, especially with Friday's action, is you could see here pretty much since the 9th, we've had lower high, lower high, lower high, so on and so forth until the 16th. And then on Friday, we finally got a higher high. So if you were looking at, a swing trade, this would be your entry point, having the confirmation of a higher day. So let's see what happens. If that's the case, we may actually revisit this downtrend line, or who knows, we may revisit this 50-day moving average. But for right now, Friday's action definitely marked at least a short-term bottom in the market. So we're going to take a look at some long plays that maybe we can put on this week and get back into positive territory for the portfolio. The NQs, similar fashion, they bounced on Wednesday, Thursday. Okay, again, you can see those two tails there. And then sure enough, again on Friday, we finally put in a higher high. Okay, again, coming from the 9th, you can see those highs progressively getting lower until Friday's action took it back above the last high. So again, downtrend lines intact. 50-day moving average is rolling over. Now, we did not close near the highs on Friday, which obviously I would have liked to see. The other thing that I've noticed is we came pretty much right into previous resistance or previous support areas, which are now becoming new resistance. So this is one thing that happens when you finally break some key levels. The road back to getting back to those highs is a little bit more difficult, a little bit choppier. I don't think we're going to see that V-shaped reversal that we saw so many times before. I think this may be a little bit more of a fight, at least to get back to the 50-day moving average and then eventually to new highs. But the one thing that we do have at our back is if we do trust this linear regression channel, and it seems to have identified some good trades in the past, we basically pushed down below the second standard deviation, but we did not close outside of those on any of the indices. So, the way I look at this is this could potentially be a nice little bottom to set up the next rally, similar to what it did here, back here. Okay, a couple different areas that we came into, and really just it set up the next 6 or 8 months of a rally. So I don't know if that's going to be what happens here, but for right now, we have some key levels to trade against, and the indices look like they're at least putting in a short-term bottom, if not the bottom, for the next leg higher. And again, you can see here on the Dow, same as the other two. Okay, coming in lower highs, finally made a higher high. This one closed much better than the NQs and the ES. And it did break back above the 16,236 level, which had been some key resistance and support in the past. So again, downtrend line still intact. 50-day moving average is going to start rolling over, and that could definitely define potentially a downtrend, or we can at least come up to it, move sideways, and then break out higher. So a couple different ways to look at it. The Russell, on the other hand, was down on Friday. This one had potentially preluded to a rally. Okay, this was much stronger over pretty much the whole week. All right, this one was different. This one was actually higher for the week. You can see here on the weekly chart we had an open green box, open green candle, and again coming right into that second standard deviation and setting up a potential move higher. So for right now, I would say, we're in a little bit of a wait and see mode. I know I've said that the last few weeks, but short term, I think we move higher from here. Long term, I don't know if this is necessarily the bottom, but it's a bottom. And let's see where we can get to from here. You could see on the Russell, we do have some key resistance areas right here at 1100. It broke above this 1075 area, which had been some nice support over the last year. And for right now, if we can start moving higher, then the next area I see would potentially be this 50-day moving average as this moves down and becomes a negative impact on the market. So we did exit 4 positions this week. We exited Alcoa short, Apple long, RSG long, and LUV long. We exited those. You could see here, and you could also visit it on the website. But essentially what we did is, if you take the average of those 4 trades, we averaged a negative 0.14R loss. All right, so nothing major, really just some minor losses there. You can see here, down $7, up 127, down 335, and down to 11. All right, so with those exits, we'll take a look at those real quick in a minute. We are left with 5 positions. 4 of those are long, and the only short is Estee Lauder, which we're up 29.16. That's a little bit not correct at this point, because we did take half a position off. We took 70 shares off at a lower price. I forget what it was, but we did take that off. So once we exit the position fully, I'll average the 2 prices together, and that'll become our closing price. So for right now, we did take a little bit more than $29 out of that trade, and right now it looks like we're still in the trade, so we'll see if that can get us some more profit. But again, left with 5 positions. We'll take a look at those now, and then we'll go over the weekly watch list. All right, so the first trade we'll go over that we exited this week is Alcoa. We put it on and exited this week in this trade. We put on a short position on a close here on 1010 below this 1536 level. We said that there was a downtrend line intact. It still is intact. And we were looking for a target of 1380. 13. And I said at one point that 1380 could potentially be the first target. I did not take half off there. I wish I did. But then we also said that once it starts breaking to new highs, because similar to the market, this had made consecutive lower highs, and once it made a new higher high, we wanted to exit because it was a potential reversal signal. So we got that signal on the 16th, which was Thursday, and we exited on Friday at the open 1486. So you could see here pretty much what I had discussed could potentially go right back to that downtrend line, or 1536. Looks like it's at the downtrend line now. This looks like a stock that is in the process of reversing. First thing that we would need to see to confirm that would be this break over this trend line. But from a short perspective, that's why we take short positions and we take them using targets. We're in and out of them very quickly. I very rarely like to build a portfolio on short positions unless the market is truly just trending downward, and right now we've had a correction. I wouldn't say that we are trending down at this point, so that's why the positions to the short side, very quick, very in and out, and that's what we did here with Alcoa, or actually that's what we should have done here, but we didn't. So again, we took a small loss out of Alcoa, down $7. again, we could have had a nice profit if we had taken half off at this 1380, but we did not. So that's another just little key tip is when your stop is hit, definitely take it. So we saved ourselves about 6% on the Alcoa trade by exiting at the open. The other one we exited this week was Apple, not Advanced Auto Parts, Apple. Forgot the L. Apple we exited. We held on to it here on the 15th. The actual exit signal came here on the 16th when the market was a little bit higher. Apple happened to be down. I didn't like that kind of price action, so we exited at the open on Friday, which was 97.50. You can see here, I think Monday after the close they have earnings, so let's see what happens there. We could have said, hey, you know what, 94.59 should be our stop, but I felt fairly confident that between the break of this uptrend line, this asymmetrical triangle, and a breakdown under 98.03, I felt fairly confident that we should exit that trade. And you can see we came right back to that backside of the uptrend line and then sold off on Friday. So Apple we took a small profit out of. Other one we exited was LUV, Southwest Air, and this one was pretty much a disaster from the beginning, and it looks like it turned out to be a disaster at the end. We had a great run to start off, but again, when I talked about when we were trending higher like this, it's very difficult to find a place for a stop. The only area I was looking at that we consolidated for about 5 days was this 31.78 level. I didn't feel confident in it. The longer term trend line was down here, so I let that go by. Sure enough, we got stopped out on the 10th, which was Monday. We exited on Tuesday, only to see ourselves pretty much with these crazy bars the last 3 days, and we're right back to 31.05 from a $30 exit. So, as good as this one looked in the beginning, it was just very difficult to manage at the end. Ended up taking a small loss out of it, which is very unfortunate. But this is kind of the real life trading. This is realistic. It's not anything in a vacuum. We're doing this day to day, and sometimes this is what happens. But you could see this downtrend line is still holding, and the fact that we had actually closed with a closed green candle on Friday, meaning that our open was higher than our close, right at that downtrend line, could potentially mean that we reverse and see lower highs or lower lows again. But for right now, I wish we would have exited, say, up here at 31.78 like I initially wanted to, but I saw this downtrend line, and that's really what kept me in the trade. The only other position that we exited last week was RSG. Public Services. And again, what we saw here was a potential lower high. We had a breakdown from that lower high on the 16th, and we exited on the 17th at the open. Again, downtrend line still intact. Uptrend line is broken. We're trading below the 50-day moving average, and we had broken this 37.86 level. So again, all those factors combined, I felt it was a good time to exit on 10/16, and we took the exit on the 17th at the open. So all in all, again, not much gained or lost there. A little bit more of a loss than anything else, but small losses, manageable losses. Nothing that's going to really be a detriment to the portfolio going forward. What that does do for us is it raises some cash to take a look at new positions and potentially add to some of the positions that we're in. So the positions we are in is Costco. We're long. In Costco, we entered up here on these breakouts over 127.52, and it sold off pretty much all of last week until Friday came, and we finally had to move higher. You could see this uptrend line is still intact. Right now, we're using 120 as our stop. It could potentially be a little bit higher, say 121, but I wanted to keep it a little bit of a distance away so we didn't get a minor break and have to exit the trade. But again, uptrend line is still intact. We're hopefully still holding or we are still holding the 50-day moving average, and hopefully going to at least get back into this consolidation between 124.75 and 127.52. Estee Lauder, okay, this one we're short. We entered that short here on a breakdown under 73.19. You could see that level had held a while. We came down, and in a couple days we had a test of our first target, which was the resistance from an area way back here in the middle of March. So we were able to take that half a position off here on the 15th. So now we're holding half a position, and we're waiting for a breakout over this little bar here. Let's call that 72.50. So I'll close over 72.50 will exit us on the remainder of the trade. If not, we may reverse lower, and our next target would be 66.67. Earnings are coming up at the beginning of November, so we do have a little bit of time to let this trade play out. Home Depot up 1.53 on Friday. And again, I've talked about the reason we held on to this. Originally our stop level was 88, and the reason we held on to this was I've seen in the past where a stock comes down and tests its actual gap. All right, so here it gapped higher on earnings. So this is the gap right here where there's no price action. And what happened is on the 15th, we came back in almost to the penny and tested that same area, 86.58, held it, and then Friday or Thursday and Friday we ended up moving higher. So we readjusted our stop to 86.58. Potentially it's a bigger consolidation than we originally thought, but let's see what happens. We may very well come up, get a lower high, and then break down below 86.58, which would cause us to exit the trade. Or we could move all the way up to 93.52. It's just as quick as it came down, it could easily go up. So for right now, 86.58 is our stop. Kroger, we're long, and what we're doing with Kroger, we entered on a breakout here. Actually, I think it was actually this bar here. On the 8th, we entered, and it consolidated a little bit, and finally it gave into some selling pressure on Wednesday, Thursday, and then Friday it quickly regained that 50-day moving average, so ever so slightly. But for right now, we're still using $50 as our stop. All right, we didn't set our stop here at 51.43 because at the time we felt it was very tight. We wanted to give the trade a little bit of room to work because we knew we were in a little bit of a difficult situation with the way the market was acting. We were kind of going against the grain. So we sized our position accordingly, gave ourselves a little bit of room, and hopefully give ourselves a little bit of time to let this trade reverse and eventually start moving higher. And the last one that we're in is Pepsi. So let's see. Staples, discretionary, staples. So you could see where we're kind of geared to right now. It's a lot of safe havens. And you'll see in the weekly watch list, I'm surprised at how many discretionary stocks popped up, especially apparel. I think those, for some reason, had a good week. And so there's a lot of those on our watch list. But Pepsi, another staple stock, so something that people can't really live without. And we basically are holding this $90 level. All right, we have our stop set down here at 91, I believe. Let's check that. Pepsi. Yep, 91. All right, so here stop is at 91. That's not accurate. 90. It should be 90. Let's change that. That's not accurate. That should be 90. Either way, we're going to set that to 90, which is right here at this low. So we came back in, broke below this 90.85 level, and then on Friday we moved higher. Again, we entered on a move and a close, I think, right here above 93.82. Sized our position accordingly, and are now, hoping that at least it consolidates a little bit longer. If not, it may reverse and test this 88 level, which at that point we would be out. I think for Pepsi at this point, if it broke below this low here from Thursday, I would feel fairly confident that we could exit that trade and move on, or at least step aside for now. All right, so that's our positions. That's the market. Quick look at the market and the trades that we exited this week. So now let's get a quick look at our watch list. There's approximately 20 to 25 stocks on this watch list. We're going to look primarily at long plays. First one is ABC. This one was on here from last week. Continues to consolidate, hold up well in the box. Still waiting for that break over 78.30. You can see here that this uptrend line is pretty much been broken by time. But the fact that we are still consolidating in this box, stocks holding up well, came back down, tested the bottom of the box on the 16th, which was Thursday, and Wednesday, closed above it both times. Friday had a slight move higher. So this is the intention of what we do here. We're essentially, as much as it sucks when the market pulls back, it really is a key element to our trading style. It really helps identify the strongest stocks, and those are the ones we want to be in, because when the market turns around, those are the ones that are hopefully going to advance the most and get us to a point where we're making significant profits, the 10, 20, 30% profits on these trades. So we're always looking to be in the strongest stocks, and when the market pulls back, it really helps identify those stocks. So ABC is one of them. ADP is another. This is one that we added this week. Again, you can see here, uptrend line was broken slightly, but at this point, it's still in a consolidation that it has been for some time now. It had a false breakout, a false breakdown. So at this point, I would say we're probably waiting for a breakout over, let's call it to these highs of 75 for argument's sake. So over 75 is really where we want to get in ADP. Allstate, this one was looking really good. Finally gave into some pressure on Wednesday, Thursday, but reversed quickly on Friday. If we use the lows here from this previous pullback on the 30th, you can see we are still above that trend line support. So I have this on here only to keep it on our radar. Over 62.33 is our potential breakout level, and the reason for that is I've seen many times where UNP was one of them. I've talked about that many times, where a stock has a false breakdown only to rally back, push through the resistance, and go for a little bit. So Allstate stays on the list. BLL, Ball Corp. You can see here support, resistance. Oops. And there's your consolidation. Again, it's been in that consolidation for some time. So over 66.24 would be a good point to enter. Now you can see again on the linear regression channel, it came up and touched that second standard deviation move, came back, regressed to the midline, and now it looks like it's getting ready to set up again. You can see what happened here. Lower high, lower high, lower high, lower high, lower high, and finally a higher high. So this one looks like it may be reversing and getting ready to move back higher. Berkshire B. Okay, this one does not pay a dividend, but I like the pattern, so I wanted to have it on the list. Very strong pattern here. Nice tight consolidation. Trend line is moving higher. 50-day moving average is moving higher, which we can't say about the market. So over 140, 120 is a good entry for Berkshire B. ConAgra Foods, another staple. Okay, trend line is moving higher. Accelerated trend line, because you can see all the lows don't even touch the 50-day moving average. It tried to break out earlier last week. Couldn't do it. So right now, simple as that. All right, so there's your entry point, 33.82. I would most likely, if we were to enter this trade, I would probably want to put my stop back down here. It depends when the trade actually triggered. If the 50-day moving average could get over 32.80, then maybe we would just set it at this low maybe we'd set it right here, 32.40, which looks like it was two lows of the tails here. So I think maybe 32.40 would be a good stop. CCI still on the list, still holding up well. You can see it tried to break out, couldn't do it. So right now we're looking for a breakout over 81.50 as a good entry point. Stop is 78.35. I think that one would be accurate. We could even move it down to 78. So it closed below 78, which looks like it was the tails from here and here, the 15th of September and the 15th of October. C.H. Robinson Worldwide, CHRW. You can see we have a large consolidation happening. Okay, the stock is not pulling back, it's consolidating. It's very key. All right, so over 68.61 would be your entry. Under, let's call it 63.50 would probably be your stop level. CME Group. Stock is obviously trending higher. And what it's doing now is it's consolidating. It's a little bit of a different pattern, okay, because you have slightly lower highs. So right now it's actually pulling back in somewhat of a channel. So you'd want to see a breakout. I would say you'd probably need to see a breakout over, I don't think you'd have to wait for a breakout over 82.86. I would say you'd want to see a breakout more over 81.65 and then set your stop down here at 75. All right, that's how I would play that one. I don't think you necessarily need to wait for this breakout to reoccur, but if you wanted to, it would be 83. CenturyLink, okay, still holding that box. It broke down ever so slightly on Wednesday, Thursday, was not able to sustain those levels, moved back higher Friday, so this is holding on barely, but over 41.30 is your entry point. And then if that was the case, you could see what happened is it pretty much filled the gap from earnings, or whatever this bar was, whatever happened here, it filled that gap, so it bounced off of those highs. So I would say 37.94 would be a good stop level. Discover Financial, very similar to Allstate. Slight breakdown, held the trend line, now back above it. Let's see if we can get the break over 65.60 or 65.74, and then I think we're probably going to end up setting your stop somewhere down here. Again, we want to give these stocks enough room to run, especially with the market kind of doing some squirrely things. But so I would say, you know, if we can set it down here at 60.43, that's probably a better bet, and just give ourselves some time to let things play out. DVA, another 0% stock, but you could see here what's happening is it is consolidating. It has slight breakdown on Thursday, tried to regain it Friday, but for right now, if we were to enter this trade, we would be waiting on a breakout over 75, and I would say let's put our stop down here at 71.50. Okay, you could see a low here from 8.15 and another one from 10.16. Mark those levels. Green Mountain Coffee Roasters. This was one we missed last week. Again, sometimes it happens. I wish it didn't, but it is what it is. So the uptrend is very much intact in Green Mountain Coffee Roasters. It broke out on early last week on the 8th. And then what it did is very controlled, pulled back into that level, into that consolidation, I mean. So I would say we're waiting for a new breakout over 143.66, and if we get it, we would want to put a stop down here at 127.53. Now that stop may be fairly wide. It's about $17, so it's a little bit more than 10%, but I think that's where you need to have it. So depending on how this plays out, maybe this comes in and moves to the trend line again. But I think a breakout over 143 could set us up for a nice little run there. HRL, Hormel Foods, again, consolidating. All right, so let's call it a break over 52 is what we're looking for, and here's your consolidation. All right, and what happened here on the weekly chart, you can see it went sideways for a while. Had a little false breakdown, hit that second standard deviation move, rocketed higher, and is now in a little bit of a weekly consolidation. But you could see here it did break out, and what it did after the breakout was consolidated using this 49.79 level as support. So I think if we can get that breakout over 52, that's a nice little trade. Now ICE, this was one that a little bit different of a setup, but interesting nonetheless. Okay, you have this downtrend line that's been broken, and you have now consolidation forming above the 50-day moving average. So this is a little bit more of a reversal play than a continuation play, but let's call it a break over 205 with a stop under 194. All right, so we get a break over 205 is a good entry point, and look at what it's doing on the weekly chart. Okay, it's kind of coming in similar to that cup and handle pattern we saw in Costco, where you have this rounded bottom happening, and then maybe it moves higher, consolidates, breaks out. But for right now, you can see those lower highs and lower lows pattern has been broken, and now it looks like we're potentially getting higher high. And if we can get a breakout over here, we'll have another higher high and a higher low. So that's a reversal. Trend starts in the other direction. Lots of room to run. This one could go all the way up to say 260, 270 before it would hit that second standard deviation move in the overbought conditions. JWN. This one has been consolidating for what feels like forever. But again, another sign of a strong stock. If we can get over 70.57, that's our trigger point. And then we identified a couple areas where you may want to have a stop, either 67 or 65. I think if we were able to enter at 70.57, we'd want to probably put it down here at the 65 level. LB, Limited Brands, I think that's what that is, L Brands. And you can see trend line's a little rough to draw on this one, but 50-day moving average has been a nice little area of support. So right now we're looking for a break over 68.50, and then either a stop here at 65, or if we want to go back a little bit further, use the high from here and these lows, we could set a stop here at 63.36. But nice looking pattern, nice little reversal. And again, this is a stock that is pretty much within 1 or 2% of its highs when the market has fallen apart in the last few weeks. So nice to see some strength, and this is the kind of stock you want to be buying after a market pullback. Lockheed Martin. This one is one that I'm long personally. I put this on the list just because I've seen what's been going on firsthand. So there's a trend line that comes right through here, and right now it doesn't look very promising. I'll be honest, I'm a little concerned with my position, but I have a nice little gain, and I know where my stop is pretty much right here at 172.90. But what was higher highs now potentially could, if this reverses and pushes down through 172.91, could be a lower high and then a lower high. But the reason I have this on here is if it does in fact make a move back towards those highs of 181, 182, it could be a nice little addition to the portfolio. And again, you could see here, I don't know what that means. You could see here back into that second standard deviation oversold. So break over, let's say, call it 184 is really the area, or I'm sorry, 183 is the area that you want to see hold and move above. And if that's the case, then this 173 area is your new stop. Altria, this is one that has had we should have been on this well in the past, but we weren't. But you could see here for pretty much the whole year, nice move higher, consolidation, a little bit of a breakdown, and then a new move higher, pulling back now at this point. So I'm looking at these two levels here. This is one that's a little bit more accelerated. I think needs some time to move sideways. But I'm looking at this consolidation right through here. So break over 47 is a good trigger entry for that. And then again, depending on where we enter, you may want to give it a little bit of room. It's not necessarily a high flyer. So, if you set your stop down here at 43.16, you could probably be in it for a while. Nike. This is one that's just been very strong lately. Difficult little setup for right now. I don't think it's necessarily setting up great, but I want to put it on the list. You could see here it's pretty much filling this gap between this earnings move that it had here on September 25th. Okay, gapped higher, moved sideways, pulled back a little bit, but look at where this long-term trend line is. Okay, you can see it's well above that 50-day moving average, well above that. So for right now, this one, I would say if it does turn around and break out over 90, we would probably be using this stop down here around 84. It's very tight, especially considering that it's above the 50-day and above this trend line. But the fact is, if this, similar to what Home Depot did, if this continue to move sideways for maybe a month or two, I think it may set up a nice little play for us. ROST, Ross Stores. Okay, again, this is kind of going back to what I said earlier. The apparel, the Nordstrom's, Ross Stores, limited brands, they all seem to be holding up very well, which is surprising. You would think that would be like the first thing that people would say, oh, well, I don't need to shop at Nordstrom's, but I guess it's something that people, once they shop at Nordstrom's, I guess they don't go back. But for right now, you could see here, Ross Stores, nice consolidation, 50-day moving average catching up. You can see the move it's had after earnings. All right, it pretty much went from 66 to 76 in a matter of a week or so. And then instead of pulling back, it just moved sideways to digest those gains. So if we can continue to move sideways, let that 50-day moving average come up, break out over 77.50, good little setup. And I would say your stop probably wants to be either 74.18 or this gap here at 72.21. More than likely, it's probably going to be 74.18. SPG, Simon Property Group. Okay, you see the trend it had. Okay, it moved higher, and now it's consolidating. It's been doing so for pretty much half a year or so. But consolidating right there between 173, 163. And so a breakout over 173 would be the trigger, and your stop would be down here 163. Travelers. Okay, this one again was consolidating, a little bit of a false breakdown, right back in the middle of the range. So let's see what happens here when we can get a move over. Just to be safe, let's call this one a move over 96. All right, so it breaks these highs back in here too. So if you get a move over 96, then you could potentially use 91 as your stop. You can see here earnings coming up on Monday as well. And the last one, Waste Management, which was on the list from last week, was consolidating, broke down, hit that trend line, quickly bounced off of it, sitting right below that consolidation again, looking for a breakout over 47.60. And if we can get that, I think you're probably going to want to use 45.62 as your stop, that being the high from here and the lows from the last 2 or 3 days. So that's your watch list for this week. Again, all bullish plays. I'm not really looking at taking any more bearish right now. If things change, then different story. But the fact that we have an identifiable low in the markets, I think potentially short term we should at least see some kind of move higher, and we've identified now a good 20 to 25 stocks that are holding up much better than the market, and I would expect them to continue to do so. So if we got those trigger points, those entries, I would take those before I would take any more short plays. So that's it for tonight, guys. Thanks for watching. Hope this helps with your trading. If you have any questions or comments, please leave them in the video below. Make sure to hit that like button and follow me, StockTwits, Twitter, Google+. Subscribe to the YouTube channel and subscribe to the nightly recap on the site. All right, have a great rest of the weekend, and we'll see you on Monday.